Hello and welcome to our market alert video for today, which is December 8, 2023. I hope you are well and that this video is finding you healthy, wealthy, and wise. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And thank you for watching this video. Our website is rpoa.com if you want to check us out. The jobs numbers came out this morning and they came in way higher than expected, which says that the recession that everybody is so concerned about may not come to fruition. If everybody has a job, then it's hard to have a recession. However, when you look under the hood as to what those numbers represented, you get a little bit of a different picture. And that is that many of the striking workers went back to work. So that increased the number. If you take all that out, you take seasonality out, it was basically not a big number after all. So what does that mean? Well, the concern, of course, that people are looking out for is that inflation remains high. The Federal Reserve has to continue to raise interest rates so high that they cause a really bad recession, and the recession therefore causes the stock market to crash, and that's kind of the concern. And so everybody's hoping that they can engineer what is being called a soft landing, meaning that the economy slows down but doesn't go into a bad recession, inflation comes back under control, and all is well. So where do we stand in terms of our forecasting on this? Well, these jobs numbers are not as important. They are important. Jobs numbers always are important, but they're not as important as what we're going to get next week. And next week, we're going to get the all-important number, which is the inflation number. And then the next day, on the 13th, which is Wednesday, we'll get the Federal Reserve actually telling us what they think about that and what they're going to do about it. Our view is that they're not going to raise or lower interest rates at this juncture. However, what they have to do is manage expectations. The challenge they have is, or the benefit they've been having so far, is that the expectation of higher interest rates has caused mortgage rates, car loans, credit cards, all those kind of interest rates to be high. And therefore, the market interest rate has been doing the job for them. They haven't had to raise interest rates because the mortgages all went up without them doing anything. So if those rates start to come down, if expectations start to come down, then that could cause the Fed to have to raise interest rate to compensate for that. So therefore, we think that Federal Reserve Chairman Jerome Powell, when he gives his talk about what they're doing with interest rates, is going to say, we could raise interest rates again. We have no plans of lowering them at this time. Do not get excited. Don't try to front run this because we're not seeing it, and everybody calm down. Most likely, the market will see right through that and not believe them because it is looking like inflation's coming down and should continue to do so through into next year. So our fearless forecast for the year we haven't come out with yet, but it's looking more and more like it may be time to go back into bonds. We haven't made that decision yet. We want to wait until the Federal Reserve tells us on Wednesday what they think. As you guys know, we've been out of bonds since April of 22, so a year and a half now. And during that time, bonds have been demolished, crushed. We've had over the last several years now, 3 years maybe, the worst bear market perhaps in history in bonds. And so that may be coming to an end now, and it may be time for us to buy back in. So we're going to be examining that as we get the data. The other side of the coin, of course, is the stock market. Next year, we think the stock market could have a very good year if, in fact, the Fed does lower interest rates in the second half of the year. However, it's going to be dependent on why they're lowering interest rates in the second half of next year. If they're lowering them because the economy is doing okay, inflation's coming down, and they want to just lower interest rates to keep things going, then the stock market, we think, will do very, very well. On the other hand, if they're lowering interest rates because, oh my gosh, they've broken something, they've created a bad recession, the stock market is crashing left and right, the economy is falling apart, and now they have to scramble to lower interest rates to stimulate the economy back up to a good place, then that would be bad. So we'll have to wait and see where that falls out. But in both of those scenarios, bonds should have a good year next year. So that's where we sit. As you guys know, we've been forecasting for you this year, and so far everything that we have said has come to fruition almost exactly. We did say that inflation would bottom in June at 3%. It did. We said that it would come back up after that to around 4%. It has. We said that the stock market would like that. We'd have a very strong rally into June, which happened. We said that there would be a correction after that as inflation started to rise again. It happened. And then we said there'd be a big rally after that when people bought on the backs of the sellers. And that's exactly what happened as well. So far, so good in terms of our forecasting. And of course, next year, early in the year, we'll have our fearless forecast for 2024. I want to thank all of you who watched this video, who subscribed to it. You guys are great. Hopefully we help you with that. Share the video with your friends. Subscribe if you haven't. And for sure, go to our website and see all the resources we have available to you if you are within 5 years of retirement or if you are already in the first 5 years of your retirement. Our goal is to create SCWPers. If you don't know what a SCWPer is, it's the acronym for Second Childhood Without Parental Supervision. And all of our clients that retire, we call them a SCWPer. We want them to go play, have fun, enjoy their life, and not worry about all this boring financial stuff. So our goal is to create as many SCWPers as we possibly can, and hopefully we can do that for you as well. So again, thanks for watching this video, and we will talk soon.